Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. But Ben, today you're not at the University of Missouri. Where are you at?
I'm at my home. I'm working from home today. I've got a little bit of a sore throat. Didn't want to make anybody sick, so I'm here today.
See, the sore throat's probably just a guise from you yelling so much over the weekend, watching those K-State Wildcats beating up on TCU.
You know, my friends were making fun of me. We drove back from Dallas or Arlington on Sunday, and all day Sunday I couldn't talk. And the more I talked, the squeakier and high pitched my voice got. And they thought it was funny. I didn't find it as funny. But all good, all good.
Yep,
Good
yep,
weekend.
yep,
Chiefs
yep.
lost. That stinks. But
Yeah, that game was so, I don't know, it was just such a muddling game. It's like, yeah, I don't know, it was just a bad feeling all around. And then, you get the late lead and then it just kind of fell apart again. So
when I lived in Ohio, I became a Bengal. Like I followed the Bengals fans. I became a follower of the Bengals, and so I was kind of having a little bit of hard time.
identity crisis.
Yeah, yeah. But good for them. I like Joe Burrow at
Well,
the Bengals. So.
definitely a bright future in that squad. But looking at some adjustments from the past week in the markets, what have we really seen?
Yeah. So now that we've in December, I'm gonna go ahead and we're gonna add in old and new crop back into the mix. So for old crop corn, which is now March corn, down 31 cents to 6.40. New crop for December 23, down 16 cents to $5.95. January soybeans down 20 to 14.37. November soybeans for 2023 down 19 to 13.76. Soybean oil took it on the chin this last week. Actually was down the limit on Wednesday of last week, down 10 cents, a little over 10 cents to 62 and 3/4 cents per pound. Soybean meal up $20 per short ton to $432. Old crop wheat for March down 41 cents to 7.39. New crop July wheat down 40 to 7.57. And then finally that West Texas Intermediate crude oil up 44 cents a barrel to $77.51. So basically,
So oil and bean meal up, pretty much everything else down.
yeah,
The
yeah.
synopsis there. So what were sort of the market highlights that really led to those adjustments?
Yeah, and I don't have a lot. It was a big week in the price movement, but it wasn't really a lot, really of fundamentals, if you will. It was mostly in the technical charts. But U.S. gasoline consumption remains about 10% below last year's levels. U.S. weekly ethanol production decreased 6 million gallons week over week. After a strong week of U.S. export sales last week, this week's export sales were down nearly across the board week over week. Soybean sales were flat, while grain sorghum sales were just slightly higher. Open interest futures and options positions of corn drastically fell. So again, it's that money market here that kind of really led some of this. Corn was down 18% week over week. So just a really big drastic decline there. Open interest of Chicago corn and wheat was relatively flat with slight increase. Soybeans and wheat was relatively flat with slight increases. However, money managers added net long positions across the board. Weekly export inspections for corn, grain sorghum, and wheat were down for the week over week. Wheat inspections exceeded all expectations. And then soybean planting in Brazil is now roughly 87% complete, slightly behind what was experienced last year. Soybean acreage in Brazil might be slightly more than originally estimated, but might be offset by a decline in yield. And then dryness is starting to emerge in central and southern Brazil once again that we saw last year at this time.
Some big factors, that were really pertinent to at least the supply chain within agriculture. We saw the avoidance of a rail strike through congressional and presidential efforts there. So really, what does this mean now, short term and long term, for the market as it looks to maybe relieve that tension?
Yeah, good question. I think this does take a little pressure off. I think some of this was already built in. I think the market kind of came to the conclusion maybe last week that Congress and the president were going to do whatever it took to prevent the rail strike. So I think some of that risk of a complete collapsed, kind of fell off the table over the last couple of weeks, and then just really kind of culminated with the passage of the bill. So it's nice to see goods continuing to flow. Again, it's really that paid time off sick leave that was the big issue for a lot of those rail union workers. That still remains unresolved and will continue to get I'm sure talked about and addressed in the weeks, months, and years ahead, but at least for right now, goods and products continue to flow.
With those issues still, really unresolved, what I guess potential is there for more tensions like what we've been seeing the last several months to rear its head again in the future?
Yeah, I mean, I think there's always the possibility. It probably dampens the momentum, if you will, for a big move there. That's I know everybody has strong feelings on both sides of this argument in terms of what should happen. Again, should is a subjective term, meaning that my opinion might be different than somebody else's, and somebody else's might be different than yours. But um, there's always this chance out there. I think workers in general across the board, across the entire economy, are recognizing that there's the opportunity to get higher pay, higher wages, better benefits, better working conditions due to the tightness in the market. I don't see that changing anytime soon. I speak about this all the time at farmer meetings right now. It's like labor is a hard thing to fix. It's not going to be resolved anytime soon. There's no political lever out there to really change the labor, picture that we have. And as a result, we're going to continue to see negotiations for labor continue to pop up across the economy. I mean, that's a prediction. That's my forecast. Some people might disagree with me, but that's what I see happening is like this labor situation is not changing. And this is just kind of the result of a tight labor market.
Going off of that, it really seems like the situation that we found ourselves with the rail workers, that it was really indicative of the larger labor market, that was kind of reflecting itself back into a way that heavily impacted agriculture. It kind of makes you wonder, looking longer term, what other areas might ag start to become adversely affected, looking at different labor issues. I mean, one of the issues that still remains obviously is the meat processing worker discussions and things like that. So it's just going to be an ongoing conversation within agriculture. It kind of is what it is, I guess.
Yeah, no, I agree completely. Businesses are now making decisions based on worker availability. That's not something we've talked about for 20 years in the broader economy. We've talked about it in the ag economy, but that's playing a bigger role in business decisions. Prime example, look at meat packing facilities. A lot of these new meat packing facilities and meat packing capacity that's planned to be brought online is all happening near metro areas. 20 years ago, we were pushing them away from metro areas because we didn't want, consumers, like there was all this thing about nuisance, right? Smell, sound, all that kind of stuff. So we were pushing them away into rural areas. There's no labor in rural areas. And so now it's moving back towards metro. Even the big one here in Missouri, just down the road, it's being built right on the outskirts of St. Louis. Why? Availability of labor. So,
Well, and it seems like a snowballing, effect too. Whenever you look at these rural communities, it's the rural communities don't have the labor to support these bigger plants, so then the plants go elsewhere, and then that further decreases the workforce in these rural communities. And a lot of the discussion too around during the pandemic was, well, now people can work remotely, and maybe that might increase rural residency if we can increase rural broadband, but it doesn't seem like it necessarily fixes the heart of the issue. I know I'm getting a little off topic now talking about, the rural economy specifically, but it's just a tough issue to really crack.
You're right. At least observationally, what I've seen is it's a trade-off, right? You might pick up some additional jobs in a rural community, but I'll throw out telemedicine. Telemedicine is one of those things to where now you can visit with your doctor online if you want. And that's been hard on rural healthcare providers just because, now if instead of going to your rural healthcare, maybe you can get on and go see a specialist in some, larger part of the country where maybe there's a big, geographical, consolidation of folks. And so, we're seeing shifts. I mean, I got a kick out of. I went and attended the MFA annual meeting last week, and their CEO got up and he gave a Yogi Berra quote, and it was basically like the future might be different. It might change. It might be better. It might be worse, but I can guarantee it'll be different. And I think that's just true of everything. Is like we're seeing changes. It might be better. It might be worse, but it'll be different.
And looking at how the rural communities are digesting these changes, you think of things as both positive and negative simultaneously, talking about like telehealth, because then maybe you don't have to drive. People in rural areas don't have to drive so far to go to their doctor. I know growing up, I went to Columbia, Missouri, and that was like right at an hour away, to go, to see a doctor slash dentist slash, whatever else. So it seems like, pros and cons there that kind of help and hurt rural economies and rural communities as a whole. So
yeah, we're seeing changes.
yeah. So really switching gears, I don't want to, bleed the clock out on our discussion too much, but we have a global ag supply and demand estimate coming out from USDA at the end of this week. Really, what are your early expectations? I say early just because the report hasn't come out yet. So what are your thoughts heading into what this report might look like?
Yeah, so the trade's early estimate for world or U.S. carryout of corn and really grains across the board, but especially corn here is increased 2022, 2023 carryout. That's really a function of demand at this point. We have a pretty good idea of supply, and USDA doesn't make adjustments to supply in December, and so if we're going to see bigger carry out, it's going to come on the demand side. And I would tend to agree. I think we're getting to a point where, we're almost to, we can't rebound on some of the demand destruction we've seen on corn exports at this point. We certainly can. I shouldn't say we can't, but it's becoming more and more likely that we won't. So I do look for USDA to make some revisions downward in corn. They'll probably offset some of those loss of exports with increased feed use, just given the tightness in the feed grains market. And corn kind of being that preferred source of feed, even at higher prices. So I think, if we look on the U.S. side, it's really going to be a corn demand story, even though all of them probably are seeing a little bit of softer demand. On the world side, a pretty, I guess just flat picture for the time being. I think we're still trying to figure out what's happening geographically around the world. Probably the biggest changes might come on the wheat side, looking at maybe Australia's wheat crop maybe being a little less good. Like it's still good, but less good than what we thought originally. And then I think some key areas maybe are in South America, total acreage. I'm now thinking that we're going to see even more acres of soybeans in South America than what we initially anticipated. But even in my early comments, I mentioned, some of that increase in acreage might be offset with a little bit softer yield. So bigger acreage that if the weather conditions turn around, they it could lead to even a larger crop. But I think right now, pretty steady crop there.
Well, and really going into the final report of the calendar year, how aggressive do you think USDA might be on some of these numbers that they're putting out, as we kind of wrap up the year?
Well, the December report tends to be rather bland. I don't mean that in an insult way. It just tends to be, or in a way of like not looking for excitement and big changes. But the December report tends to be rather smooth, just because USDA makes their final production numbers in January. We also have the first quarter stocks report that also comes out that same point in January. So, there's a lot of moves in January. So I think December kind of is meant to be kind of a hold month, like we're holding steady, holding pattern. So I don't look for major changes. If anything, on the demand side, which you could have argued they should have done that in November. Soft corn exports, and even on the export sales, like these are commitments that aren't shipped yet, but are on the books. Even those are really soft, and so a picture that's getting worse and looking worse all the time. So,
all right, so definitely a big report to watch coming out on Friday. What else should farmers, ranchers, really ag interests of all areas be watching the rest of the week?
Yeah. So since we're at the beginning of the month, this coming Wednesday, December 7th, we'll get October's U.S. trade numbers for ag products. That will come out Wednesday morning. And then Friday, as we mentioned, those world ag and supply demand estimate reports, but we'll also get FAS's world grain and oilseed outlooks, and they come out at 11:15 Central Time. So those are kind of the new ones this week.
All right, Ben, it's always a pleasure getting the information just to get to pick your brain a little bit on some of these topics. Listeners, viewers, if you'd like to learn more about us, what we do at the weekly commodity market update, you can do so at brownfieldagnews.com. Also, check out our counterparts on the livestock side. That is Megan Grebner and Scott Brown hosting the weekly livestock market update, also on brownfieldagnews.com. Ben, thanks for joining me this morning. I'm Will Robinson on Brownfield.